Hey, good morning, everybody. Back with you again. It's Saturday morning, and this is Multifamily Unplugged. Glad that you are here. If this is your first time here in this space on Saturday morning, man, you are in for a ride. So buckle up. I have a great guest this morning. We'll get to that in a minute, but I am just excited about being here and being able to share some time this morning talking about multifamily investing, raising capital, everything that goes into that bucket. Always, I start intentionally, right? So, what is your intention for today, for the weekend? Hey, we're just a few days away from Christmas now, a week from Christmas, and the next couple of weeks will be Christmas Eve and New Year's Eve, the next two Saturday mornings. So we'll still be here. We'll still have an episode for you. If you're not doing anything those mornings and you want to tune in, great. If you got something else going on, we'll be back right after the first of the year again, as I hope you will be as well. So, my goal, my intention is always to bring great content, to bring a great guest, somebody who can deliver something that you might not know. Just get that little nugget, right? That little piece that will help you propel your business. One thing I want to talk about is your goal setting and your planning. How have you been doing on that? If you haven't had a chance to go download the goal setting and planning guide that I put together, you can get that on my website. Just go to mycoreintentions.com, go to the store, and it'll be there. If you can't find it, just shoot me a direct email at mike@mycoreintentions.com. But what are your goals for next year? What are you going to do? How did you end up this year? I always talk about taking that inventory first. Take that inventory and then figure out how you're going to move the ball forward next year a little bit. So if I can help anybody with that, don't hesitate to reach out. If you have questions, thoughts, or you're stuck on working on something, just reach out. And if I can give some guidance or some help, I would definitely try and do that. All right. Hey, I am excited about my guest this morning. He's coming to us from Twin Falls, Idaho, wherever that is. And he is a multifamily syndicator. Let me bring in Sennett Eckrich. Hey, Sennett, good morning.
Hey, Mike, thanks for having me here. I appreciate it.
You bet. I've been looking forward to this. I'm kind of excited. You and I had a great conversation on your show, and I'm kind of excited about continuing that. So glad that you're here.
I've been looking forward to it as well.
Where is Twin Falls?
Twin Falls is actually a great city. I say it's right in the middle of everything. It's halfway between Boise, Idaho, and Salt Lake City, Utah, almost exactly in the middle of those two.
So here we are, December 17th, 18th, something like that. What is the weather like?
Cold. One of the best parts about Idaho is, as I mentioned, it's right in the middle of everything. It's very diverse. It's cold at my house, but there's not a lot of snow just like right in my backyard. Those people that want to ski or snowboard, that type of thing, I've got 4 or 5 snow hills within an hour of my house. So you've got the best of both worlds. Down in town, no snow, but up in the mountains, there's a ton of snow right now.
Wow. Awesome. So right where you're at, you don't have snow.
Well, I look out my yard and I have a little bit out there, but not anything to really mention. In the shady spots, there's an inch or so, but
yeah. I had a buddy of mine call me from Minnesota or text me from Minnesota this morning, said we had a call scheduled for later today. And he goes, I got to bail on the call. He goes, we got so much snow. And Minnesota is one of those places that gets an awful lot of snow every year. So, hey,
very blessed.
Yeah.
Where I am.
So one question I always ask people is, in what one word best describes you personally and professionally?
I thought about that, and in the best word for me, it's actually quite surprising that your intro and what you said, because my word is intentional. I am intentional about all of my actions. I'm intentional about the time that I spend. I'm very intentional about what I do, what I say, and everything in my life. In fact, intentionality is one of my core values. I focus on being intentional about everything that I do, right down from the food that I eat to the people I spend time with. Intentionality is something that's very important to me.
Wow, that's awesome. Hey, let me just share this with you. I got my coffee here, my core intentions.
That's good.
Little plug for the company. How's that?
Yeah, I think that's a great coffee cup.
Yeah, I think I think intention is something that we all have to have, right?
Yeah.
Your intention could be to get up and do nothing, and that's okay, or
Yeah.
your intention could be to get up and move the ball down the field, right? And so,
Well, the thing is if you aren't intentional about life, then you're not going to ever know where you're going to end up. And so think about it like the way I talk about it is think about it like a stream or a canoe, right? You're going down a river in a kayak, maybe is a good example, right? You're kayaking, and if you get this kayak on a good strong river and you just put it on there, right, you'll float, you'll get all the way through life, but you're going to miss a lot of opportunities to see some of the most amazing things in life. And as this kayak's going, you can go sideways, you can go left, you can go right, you can go downstream faster, or if you don't like what you're going after and seeing, you can turn around and go back the other way. But you have to be intentional about it.
Well spoken, very well spoken. It made me. I don't know why, but I just kind of zoned in on paddle boarding for a minute, and it's the same thing with paddle boarding, So, I guess because I'm getting ready to go on vacation, so
it's awesome.
Yeah. So, hey, listen. So, what in your life intentionally got you to where you're at today, and how'd you get in the multifamily space? Tell us a little bit about Senate and who you are and what you do.
Yeah, I've been an entrepreneur the majority of my life, and most of the time that I was an entrepreneur, I worked in the financial services space as a financial advisor and helping people with stocks and bonds and mutual funds. So I was always having conversations about money with people and helping them grow their wealth and helping them become, get to their best life that they can have financially. And as a piece of that, I personally was investing in real estate. Right. So my clients were over here in stocks, bonds, mutual funds, things of that nature. And I'm over here doing single family rentals, duplexes, triplexes, things of that nature. And I always felt kind of a disconnect as I was telling people to do one thing, but I was doing something else. And during that time, I grew that portfolio to the point where I couldn't grow it anymore. Right. As a single family investor, there's just limits on what you can do. You run out of time, you run out of money, and you run out of lending options, quite frankly. So I had to shift into some kind of a commercial business. And when I made that shift, I decided multifamily was the best thing for me after doing a ton of research on all other aspects of real estate. Because I love helping people and I have all that experience with all those rentals. So now I get to help people have an amazing home to live in, and I get to grow a portfolio that I couldn't grow anymore. So I made that shift into multifamily. And after I'd gone through and sold all of my single family rentals and deployed all that capital, I realized another opportunity. I could now take all of those people that I'd helped as a financial advisor and advising them on going into stocks and bonds and all those things that I didn't actually believe in too much. And I could now help them invest their money into real estate, which is what I truly believe in. I truly believe that real estate investments, private placement offerings into things like apartment buildings are the best way to create and preserve wealth. And now I have that opportunity. So I left the financial services industry. I left a really fairly large residual behind to be able to now take people's money and help them deploy it into multifamily and other real estate style syndications.
Awesome. So, what's really interesting is here you are, you're a stockbroker, you're a financial planner, and you are investing in real estate, but got everybody else investing in the stock market. And it's kind of funny because I just read an article somewhere here over the last God, 3 weeks that talked about real estate brokers, lenders, and people in the title business, that only 30% of the people in those industries actually invest in real estate. Okay.
Wow.
So why, I could never understand this. Why is somebody involved? And if you ever want to do a poll, ask the next broker you talk to who you're buying a deal from if they invest in real estate. Because I find it amazing the amount of people that don't. But I could never understand why people who are in the space don't invest in the space. Why and they see people around them making money and wealth growing and buying units and trading in and out of units. And this just quick story to this, but I when I first went in the real estate space, I sold residential for years, and I followed a national trainer. And I remember going to him the first time, and one of the key statements he said was, buy your best listing every quarter. And I thought, wow, that's interesting. I'm selling it. I might as well be in the space. I'll make money when I buy the listing. I could get in the deal. Now I own it. But I don't think I bought my best listing every quarter, but I bought 2 a year that I had listed for sure, and did other investing. But probably the best piece of advice I ever got. So I just find it interesting that so many people don't invest in real estate.
Well, and I have an opinion about there's 2 reasons come to mind as to why that doesn't happen. So number one, people that are in the industry realize that owning real estate on your own is not passive. It's not easy. Owning those properties that you just talked about as a single family rental, that's a lot of work. You have to now either manage the property yourself, call the tenants and collect rent and all that kind of stuff, or hire a property manager to do it for you. But then even if you have a property manager, you have to take care of repairs, you have to take care of maintenance issues, those type of things.
Yeah.
Plus, in my opinion, a single family house, one rental property, is one of the riskiest investments that you can make. And let me explain why I mean by that. If you make $100, $200, even $300 a month on that property, and you blow a main water line, or the roof caves in, a tree hits it, any of those type of things, you're going to blow all of the profit from that property. Now, there's ways to mitigate that, obviously, insurance and things of that nature. Having multiple properties mitigates that risk, right? Having 10 versus having 1. But now you go right back to that time. How do you get to the point where you can manage 10 rentals? You can't. Not for most people, right? Most people. So instead of doing that, you come and invest with somebody like us and do passive real estate into big multifamily syndications, thus spreading that risk across multiple different units, right? If you have one single family property and it's vacant, how much money do you make? 0, right? If you've got a duplex and it's vacant, and one side is vacant, rather, you make half of the income. But with the expenses, you're probably not making any money. If you're lucky, you're breaking even. Yeah. Now, if you get a triplex or a fourplex, you probably can suffer having one loss. But if you get 100-unit multifamily property and you have one vacant, it really doesn't move the needle.
Right. And I tell people that too. I love that you and I think the same way around that. If you're 10 or 20% vacant in 100 units, you still can pay your bills.
Absolutely.
Where, when you have that one single family, not only are you making 0, but it's costing you money every month. So the economies of scale in multifamily are so huge, right?
Totally agree. Yeah. But now this moves into the next problem. How does an individual buy a $10, $15 million apartment building? They have no idea how, right? So they can work with somebody like us that has gone through the training, that has learned how to do it, that has a team of people, that has all the relationships, and now can invest with us with a similar amount of money that it would take to buy a single family house. If you talk about the down payment that you'd have to have, that type of thing, instead of making the down payment on a single family house, invest it with somebody like us. And now you get all that diversification across multiple assets. You get to leverage our experience, our time. It seems like a no-brainer to me.
Yeah. What do people miss, do you think? Okay, because you just said it, right? It seems like a no-brainer to me. And listen, I've been in this space 30 years. People say, what do you love? I said, I love multifamily because I think it's a no-brainer. So, how about you? What do why do you say it's a no-brainer?
Well, you asked two questions there. I'm going to make sure and go back and answer the first one. What do people miss? I think that it's just education. Right. The number one factor of risk, in my opinion, is ignorance. Not knowing or understanding a product equals risk. If they get educated about it, they go through something like my Investor 101 course, which I know we're going to talk about later, and they learn about multifamily, that is going to increase their education and then thus lowering the risk so they can make educated decisions.
Okay.
The thing that I like to answer the second question about what it is that I think that makes multifamily a no-brainer is leverage. You get to leverage a professional that is educated, that has experience, that knows what to do. You get to leverage a team of people that are now going to go in there and manage that asset for you. You get to leverage other people's money, right? Not only the bank, which is an amazing partner, but also other investors, to be able to give yourself access to larger units to help with those economies of scales that you talked about a little earlier. So leverage is the number one thing that I think makes multifamily the best investment out there.
That's interesting because I think a lot of times when people think about leverage, they think about financial leverage, right? Mm-hmm. Which is one side. And when you look at the financial leverage, you can lever the bank, you can lever your tenant, but you're talking about leveraging other people's talents.
Absolutely.
And I think that's an awesome way to build a platform, build your business. So that's cool. So let me ask you this. You mentioned your course. Let's dive into that a little bit. Is your course directed to the active investor or the passive investor?
It's directed towards passive investors.
Okay.
This is an opportunity for the passive investor to go and learn all of the things that they need to know to be able to make an educated decision about investing in a multifamily syndication.
Okay. So talk about that a little bit. How long is it? Is it video? Is it written? What is that like?
Yeah, it's an email course that is all written out currently. I am working on a video version of it, but that hasn't been released yet. So to come with that. So what happens is you'll go to my website, senateskridge.com/course, and you fill out a form that just talks about, use your name and email address, that type of thing. And then my automated system is going to send you an email, a series of emails with that information that you need. So rather than hitting everybody all at one time with too much information that they can't absorb, this kind of just steps it out for them.
Like that. I like that. I think I'm going to register for your course.
That'd be great.
Here's what I always say. Even after 30 years, you can't learn enough.
Absolutely.
I always learn something new from somebody that I have on the show or somebody I'm in partnership with. So I think it's really important too, especially being in the investment space, that we continue to leverage ourselves on other people's knowledge.
Absolutely.
So great example of this. So I have an underwriter that he and I really diligently, look for deals. And so we've underwritten a number of deals. Well, a good friend of mine who owns probably 50 or 60,000 units right now, called me the other day, said, "Hey, I want to put our underwriters together and have a conversation about a tool that we use." So I said, fine. So he put my underwriter together on a tool that we use. And my underwriter told me this morning, he goes, "I learned like 3 or 4 new things from him yesterday. It was the greatest call I had." So knowledge is power, but it's only powerful if we take action on it.
Absolutely. Absolutely. I agree. It's all about action.
Yeah.
One of my mentors, Gino Barbaro, part of Jake and Gino, says, knowledge times action equals results.
Right.
And I also want to reiterate, the education. You see behind me, I've got tons of books. I'm always learning something new, reading something new, attending a course, listening to podcasts. The sign of a true leader is always trying to grow and become better. Growth is another one of my core values, right? So personal growth, business growth, wealth, always trying to grow and get better.
Hey, what's your favorite book? And I usually ask this question at the end, but I got to ask you right now. I have a reason behind this, but what's your favorite book?
It's kind of a tricky question. I've got two that I'd love to talk about. So it depends on the context behind it. My truly favorite book, though, is called Outwitting the Devil by Napoleon Hill. It's phenomenal. Yeah. If anyone has ever heard of or read Think and Grow Rich, this is like the sequel to Think and Grow Rich.
Are you ready to skyrocket your investment portfolio and leave a legacy? Are you tired of inconsistent returns received in the stock market? Then it's time you take a look at alternative investment options like a passive investment in multifamily real estate. No tenants, trash, or toilets. Just a solid return on an annual investment, including quarterly returns along the way. These lower risk and secure assets are also a great hedge against inflation. If you want to hear more about these types of opportunities, email me directly to schedule a 15-minute consultation to see if you qualify. You can email me at mike@mycoreintentions.com.
And there's a great story behind it we could dig into, but definitely check out Outwitting the Devil by Napoleon Hill.
Awesome. So I asked that question because I see Brian's book behind you, The Hands-Off Investor. And yes. I love Brian. He's a personal friend, and he, I think it's a great book. It might be a little tough for a brand new investor to read, but I come from the philosophy that your mind works like a rubber band, and every time you stretch it, it'll never go back to its original elasticity.
Yep.
I think people should read it, though, because it gives a context for, the passive investor as well as the active investor.
I totally agree. It is one of my favorites, which is why it's on that shelf. And to reiterate what you said, though, about it being a little deep, maybe for somebody in the very beginning, I'd actually recommend not that book first, but the other one next to it. I got to go the right way. Passive Investing Made Simple over there. Got to go the right direction. Anthony Vicino wrote this book. He's got a great podcast called Passive Investing Made Simple. And it's got the books have a lot of the same amount of information, the same style of information in it. But this is it's delivered in a much more simplistic way that really is easier to understand. I gave this book to one of my investors that has invested with me on 4 deals, and we've had 10 conversations. And I've explained to him all the different return metrics so many times. And after reading that book, he called me and said, I finally understand what IRR means, internal rate of return. Finally understands.
Here's what I always tell people, and check me on this if I'm right or wrong, but here's what I would tell you. If you ask me what is IRR, I'd say, listen, IRR is your return on your investment, but it takes into consideration the value of time. Yeah. How much time your money is out versus just the return on the investment.
Yes. That's a great way to explain it. I would just add one word.
Okay.
It's the total return on your investment, right? Takes into account the sale at the end. A lot of people, they think of just like cash flow and cash on cash return. And they don't take into account that sale at the end, which really changes the investment.
Okay. Interesting. Yeah. Yeah. I believe that a lot of times if we just simplify things and dumb it down, and I'm one of these guys, I like to pour into people, right? And everybody tells me, man, you give too much information, but it's true. It's real, So So I keep trying
Giving
to
too,
dump stuff down.
giving too much information is a very common problem. A lot of people have that. And one of my superpowers is to be able to take a very complex subject and relate it to somebody in a way that they can understand. Right? I take time to learn where they are in their education and what level that they are at, and then I go and explain it at that level. Right? So someone like you and I, we can talk about IRR at a totally different level than somebody that has never been into investing before. Right? So I like to learn where someone is and then communicate at that level. Right? And part of that is following, the platinum rule instead of the golden rule. We've talked about that a lot in the past. And, the golden rule says treat everyone the way you want to be treated. Well, I personally think that's not a good thing. I like to follow the platinum rule, which says treat everyone the way they want to be treated, which takes a certain level of understanding, right? But once you learn where they're coming from and how they view the world, you can now relate to them in their way.
Yeah. And how you discover that is if you take into, back to good books, right? If you take into Dale Carnegie's book, How to Win Friends and Influence People, he really talks about how to find out about people, how to be able to pour into people and build those relationships. And hey, let's talk about books for a minute. Have you read my book?
I haven't, unfortunately. I haven't had a chance to do that yet. It looks like a great book, though. It's on my short list for this year.
I'll make you a deal. When we get off, send me an email with your address. I'll send you a copy, and I'm going to download your email stream.
Awesome.
On your course. So
I'm looking forward to it. Thank you.
Yeah,
I'll read it.
Good. So what are you working at?
I'm actually working on a couple of different things. I just mentioned earlier the video version of that course, right? So trying to put out content to educate people and make sure that everybody understands that. I'm also doing a small joint venture product right now, which, to help people understand the difference. We talked about syndications where you got a lot of people together to buy a big asset. Yeah. A joint venture is where a smaller group of people come together and buy a smaller asset, right? Typically. And it's just similar to a syndication, but it's smaller. So I've got one of those I'm working on right now up here in Idaho. I'm really hoping to close that by the end of the year. But as you mentioned earlier, there's some holidays coming up. So hopefully we get that done. If not, we'll push it into January and that'll be okay. And then I'm always looking for more deals. I've got a 80 unit in San Antonio, Texas that is in the pipeline. I think we're going to pull the trigger on that and start capital raising and looking at that early next year. So always looking for more partners and more investors, right? So if you know anybody that's looking to deploy some capital, I'd love to talk to them.
Hey, do you only raise capital for the deals you do, or do you have bandwidth to raise capital for other deals and become part of that GP team?
It's a great question. And I think it's something your listeners probably understand the difference there, right? But I have done both. I have done what they call co-GP, which is what you're talking about, raising capital for other people's deals. And I do like doing that a lot. And my goal is to do 2 to 3 of those next year. And the rest of the deals will all be deals that I'm running myself, where I'm actually an active member of the deal finding process.
Nice. What are your goals for 2023?
I love it. So goals, I do things a little bit different, right? Everybody talks about, goals for the year and New Year's resolutions and all that kind of stuff. And I do that, but then I like to break it up by quarter. I read another great book once called The 12-Week Year, which really what that does is it breaks up the entire year into quarters, and you focus on quarterly goals rather than annual goals. That's the short version. I'll say just saved you 150 pages. Obviously, there's a lot of great value in that book. I highly recommend reading it. But so I'm going to tell you my annual goals, but then realize that I break those up per quarter. My goal is to raise capital for 10 deals in 2023. which is going to be $10 million. I'm going to raise $10 million in 2023, 3 of which are multifamily syndications for other people like you asked about, 6 that are on my own deals that I'm actually out there purchasing on my own, and then 1 alternative investment. And let me explain what I mean by alternative. A lot of people think multifamily is already alternative.
Right.
But I believe in specializing in one thing and then diversifying through people who specialize in one thing. So what I mean is those first 9 deals are all going to be multifamily. But I want to find one operator, someone that's running a good deal in a different asset class besides multifamily. Something like, and I don't know what it'll be yet, but something like self-storage, oil and gas, retail. One of those types of deals. That way my investors can now diversify their portfolio a little bit and put a little bit of money into something else.
I've been kind of writing notes here, so a couple things to chat about. So you talked about the 12-week year. Love that philosophy. Do you know who Ed Milet is?
I do. Yeah.
Okay. So he talks about 3 days in one. You ever hear him talk about that?
I have.
He goes from 6 to 11, from 12 to 6, and from 6 to 10, right? And he says that when he chunks his days out like that, he gets 3 days out of one day. And he goes, when he took on that mindset and that philosophy, it made him much more productive in what he does. So I just thought, it kind of made me think of that when you were talking about the 12-week year. 2 of your best tips for raising capital. How are you attracting investors? Where are you finding your investors?
My 2 best tips are build relationships and give value. Right. So Gary Vee has a great book, Jab, 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 Right Hook, right? He talks about that. So give more value than you ask. You shouldn't be just talking to people when you have your hand out. Be willing to give that value over and over and over again. And where am I finding my investors? I do a mix of strategies with that. Number 1, I love in-person places. So right here in Idaho, I am about an hour away from Sun Valley, which is where all the movie stars live. I go up there on occasion, go to networking events, also members of country clubs, anywhere that people with disposable income hang out. I want to go and put myself in there and just network and meet people, but focus on what I just said first, build relationships, and then give value. And then people will naturally want to give you money. Right. The second tip is doing things just like this. Get my name out there, give my value away, give that course we talked about away, provide as much value to audiences like yours as possible.
Nice. And then markets. What markets do you like?
So I focus more on places where I have teams of people than markets. So my 3 markets that I specialize in right now are Idaho, Oklahoma, and Texas. And the reason is because I've built those teams of people in those areas. Great markets to focus in, but I'm going to grow that. I'm looking at a team of people that I can partner with in Kansas City, looking at a team of people that I can focus or partner with in the Carolinas. It's all about where do you have great operators that you can partner with.
Nice. Any where as you still got a few minutes?
Yeah, I got time.
I just want to make sure because I know I said that we were going to go maybe 30 minutes, but I'm kind of digging the conversation. So
yeah, me too. I didn't even realize it'd been 30 minutes.
I know, right? Where do you see the market going? Okay, so the Feds have been goofing around with interest rates, and the CPI numbers came out this week, and those were better than expected. And they're saying retail sales are up, and where do you see this market going? There's a lot of doomsday experts right now.
Well, I like to follow people that I trust that have a good track record to be able to answer these types of questions. And the reason behind it is because I have a crystal ball, but there's a big giant crack in it,
Yeah.
and it doesn't really tell me anything. So I follow people like Neil Bawa. Neil Bawa is known as the mad scientist of multifamily. He's a data scientist and has a lot of information that he follows and aggregates together. And I actually just watched a webinar with him where he predicted this exact answer. And so I don't want to take credit for it, stealing straight from Neil, right? So he says that interest rates are going to continue to rise over Q1 and level out through Q2 of 2023. Now, when that happens, that's going to cause cap rates and purchase prices of commercial properties to improve for the purchaser, right? So it's going to become more of a buyer's market somewhere around mid Q2, and then that's going to continue into Q3 as rates start to come down. Right? So there's going to be a lot of opportunities coming up in the next several months to get great deals, right? Properties on sale. And one of my favorite sayings is, and I stole this one too, right? Rip off and duplicate, R&D, right? One of my favorite sayings is fall in love with the property, marry the property, and then date the rate. Okay. Why do I say that? Find a great deal. And if it works at today's interest rates, it'll work when the interest rates come down. Right. So buy it now, refinance it if and when the rates do come down to a more favorable level.
Well, there's one thing that we kind of don't agree on, and that's to fall in love with the property. Because I always tell people, I say, hey, and I think I might have told you this story before, but, beautiful spring morning, walking a property with this property manager. The steam's coming off the pool. The grass is cut. You could smell it in the fresh air. Beautiful property, 350 units. I'm falling in love. Can't figure out if it's with the property manager or with the property, but so I always tell people kind of, keep that distance though, but I like the way you position that because that does make a lot of sense. And
I appreciate you checking me on that. I maybe the way I worded that wasn't the best. I don't ever fall in love with the way the property looks or emotional, right? It's all about the numbers to me.
Yeah.
Right? If the numbers make sense, that's when we buy a property.
Yeah. Awesome. All right. Tell people how they get a hold of you.
Yeah. So you can always send me an email, right? Senate@senateeskridge.com. But the best thing to do is to jump on my website, senateeskridge.com. There's tons of resources on there. You can go through all of my investor one-on-one course. You can actually book a meeting with me right on my website. All right. So jump on there, go through that. The best thing is senateeskridge.com. I'm also on a bunch of other social platforms if you prefer LinkedIn or something like that. And I'm the only Senate Eskridge around. So go ahead and give me a search and you'll find me.
Yeah, we had a long conversation about that. I'll have people call you and ask you why and how you got that. Hey, Neil Bawa is going to be on my program like towards the end of January. So as we get into the mid part of the first quarter, we kind of timed it that way. So nice. I'm looking forward to him being on, after the first of the year here. Listen, a couple more questions. What's your favorite tourist attraction?
Oh, Disneyland for sure.
Really?
I am a Diz nerd. I love it.
Land or world? Disneyland or Disney World?
I've been both, and I prefer Disneyland.
Oh, okay. So you're a California West Coast guy.
Yeah, and to me, Disneyland is just a lot more magical, and I think the reason for that is that it's such a smaller area. They had to be more intentional. Go right back to what we talked about earlier. They had to be intentional with every inch. And literally you walk into Disneyland and it's just this magical place.
Wow.
I know some people have problems with lines and all that kind of stuff, but I just let all of that go. And I've been there enough times now that I don't have to be in a hurry, right? I can take my time and just enjoy every aspect of it. Strolling down Main Street USA is one of my favorite things to do.
Nice. Good for you. That's awesome. Yeah, I've been there a number of times. I have a few kids, so Have
It's
to
great.
always had to do that. And then best restaurant you've ever eaten at.
I I can't actually remember the name of it right now, but I was on a business trip to Louisville, Kentucky, and I went to a steakhouse. This is one of those steakhouses that you have to order everything a la carte, right? So you order green beans and you get a little side of green beans. You order potatoes, you order that. And it was the best steak I've ever had in my entire life. Kind of embarrassing. It was a tomahawk ribeye, kind of with a bone in it.
Yeah.
And in this fancy restaurant, I actually literally picked the bone up and gnawed on the bone. It was so good. So absolutely that was the best experience, best service. And I'm really unfortunate. I can't remember the name of it, but it was a high-end steakhouse in Louisville, Kentucky.
Nice. Awesome. Well, listen, Senate, this has been great. The conversation definitely, there's some good nuggets here for people to pick up on, that's for sure. So I'll tell people, go back, listen to this again. I am going to move you out. If you hang out with me in the back room, don't forget to shoot me an email with your address so I can get you a copy of my book in the mail.
I'll do it.
And,
thank you.
I will encourage people to reach out and talk to you. So stand by, and I'll see you in a minute. Hey, everybody. That was Saturday Morning Multifamily Unplugged with Senate Eskridge. Sorry. What I would say is please subscribe to us on YouTube and see more of this content, more of these educational topics and things that are going to help you grow your multifamily business, right? Couple of key things coming up that I'd like you to be aware of. Christmas Eve and New Year's Eve, we will still be here the next couple of Saturdays. So looking forward to it. I hope that you're having a great holiday season and are ready for Christmas and the holidays coming up here. Also, starting in January, if you're in Chicago or if you're coming to the area, we're doing a live meetup starting January 12th. We'll be meeting every second Thursday of the month. It'll be a live event, networking, personal introductions, as well as a keynote speaker. It will be in the South Loop, so watch for that in your email or notifications, but it'll be at a restaurant called Hugh, and that's at Cermak and State in the South Loop. It'll be a great event. Hope to see you there. If you like this today, like us, love us, subscribe on YouTube. We'll look forward to seeing everybody next week. If you need anything, don't hesitate to reach out to me. Certainly don't hesitate to reach out to Senate and pick his brain a little bit more.